Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for September 8th, 2018. Please hit the like button and also subscribe to this channel. If you have any comments, questions, please make them below. We'll look again at pretty much a normal setup as always. We'll look at US stocks, foreign stocks, divergence, really big divergence here. We'll see which one. We'll try to figure out which way the future direction for US and foreign stocks will be. And bond markets also look vulnerable. Dollar, we'll look at the forex universe. Dollar is moving higher, gold is moving lower by extension, and gold miners have already hit 52-week lows. Oil approaches strong support levels, and natural gas approaches 2018 lows. So far the bounce in cryptos is failing to materialize, and we'll look at Ethereum as it makes a new low, while many cryptos are already making new lows. So throughout the presentation I'll be using the chart setup that I have here on TradingView, and this chart setup uses my indicators. You can find out more about them at MasterChartsTrading.com. So these four lines on this chart represent several things to me. One, it is a trend setter. So if a security is closed, well, in this case, if the stock is closed above the blue support resistance line, then we think about buying it. And if the stock is closed below the yellow line, no, it's not the red line, because for stocks I prefer to use the yellow line as a bearish trend setter, because stocks usually have stocks overall have a bullish bias. So here on this chart what I see is a bullish chart, fresh high here on the 29th of August 2018, and a very shallow pullback. I'm already hearing that this is the end of the world, but obviously it is not. So is this the absolute top? Who knows? And nobody knows, and nobody should worry about it. You should only worry about are you on the correct side of the trade, and the correct side of this trade is in the direction of up. So, for example, here was a couple of opportunities. These are actual alerts for my subscribers at MasterChartsTrading.com. You can see here an alert was sent on May 30th, 2018. Another alert on 28th of June. Very nice gain there for about, a little bit over 7.5%. So, pretty nice gain there. So again, overall, I think the stock market is going higher, the United States stock market. Now here we need to make an important distinction, because there's a huge divergence between foreign stocks and United States stocks. So let me show you what I mean here. In this chart, this is a weekly S&P 500 chart. Here we have, it's a little busy, but just bear with me. So in black is S&P 500, in yellow is Japanese shares, in green is emerging markets, and in purple is European shares. Now overall, I would say that these stock funds correlate highly to one another. You can also put a correlation coefficient, in other words, how in lockstep are these behaving. Actually, I'm going to change this from VGK to EZU. It's the same representation. So correlation, in my opinion, between the various world stock funds is pretty high. So overall, I think the stocks spend most of its time positively correlating. In other words, they're going up or down together in lockstep. On this chart, we can see that currently the correlations are very low. In other words, there is actually an inverse correlation between United States stocks and world stocks. And you can see Japanese shares, emerging market shares, and European shares. The correlation is as extreme as it's been in the past, well, at least 18 years, since 2001. This can also be visualized in the chart. You can see here in the zoomed in pane, you can see the stock market of the United States is going higher and pretty much everybody else is going lower. So let's look in a little bit more detail. Let's look at Europe. We can do EZU or VGK. Let's do EZU. Makes no difference. We can do EZU or VGK. Here's VGK. But EZU actually kind of looks even better because, for example, right there on August 28th, 2018, you know, this, if you sophisticated enough to trade stocks both on the upside and the downside, then this would have been a good opportunity to short, in my opinion. So Europe marching towards the fresh lows, and United States stocks are marching higher and higher. So let's look at the emerging markets. EM, same thing. You can see this bounce, and I was saying this, if you listen to my previous videos, this was not a bounce to be looking for a bottom. This is a bounce to get short. Obviously, you know, if you were how do you call it, aggressive short, you could have shorted here at the yellow line, but I prefer personally a more conservative approach, and I would have waited for a bigger bounce to 45.25 or so. This did not materialize, but you know, you cannot obviously enter every trade. Here's a FXI China, also nice opportunity to short, potentially the yellow line if you're aggressive. Overall, emerging markets seem to be in a downtrend, and I would definitely avoid it. And potentially, I would potentially look for inverse positions. You can do it with EUM, for example. This is an inverse emerging markets ETF. And we're simply doing the opposite. We're looking for buying opportunities, but please keep in mind that this inverse retail ETFs, they have slippage and they don't exactly follow the underlying, in this case EM, as closely. I think the better choice would be possibly to buy puts, although those are not ideal either. And finally, let's look at Japanese shares, EWJ, and this is approaching fresh lows. You can see it right there on the 7th of September 2018. We're basically at fresh lows, and this is threatening a major breakdown, especially if we get a close below 56.55. Especially on weekly basis, we could easily move lower from here significantly. I mean, this could be like a start of a bear market for the Japanese shares. So far, I can make a point or rather claim that we can say that maybe we're still in a bull market, but just barely. But if we get a close below these levels here, I think we're going to be unequivocally in the bear market. So European equities, Japanese equities, emerging markets, all in bear markets. United States market in a uptrend. Again, I'm trying to figure out if this divergence, historical divergence really, in all three major non-United States markets, is this something that we should be looking towards as a reversal for the non-US equity? In other words, they will appreciate from here, maybe European equities bottom and then rally. Alternative scenarios, we could see S&P come down and actually also join the bear market. It's just possible, but right now I'm just very surprised and a little concerned at the magnitude of this divergence. Okay, so let's continue to bonds. So first let's look at TLT, long dated treasuries. So actually last Friday I said that I did not like this 31st of August 2018 close. This is strong selling. We had a close below the support resistance lines. You can see this red, blue, yellow, and green lines. Find out more about them at MasterCharts Trading, or you can go to tradingview.com as well and look for me there. Look for Master Charts. So TLT. So in other words, what we're seeing is we're seeing the interest rates rise. TYX is a 30-year Treasury yield. TLT is a 30-year Treasury bond. This arrow here, I thought that TLT is going to continue higher. So let me show you TLT. I thought here around mid-August, I thought that TLT is going to continue higher and may see a breakout. This obviously did not occur, and we saw a bearish resolution. So basically, we need to see if now this 118.18 holds, and if it doesn't hold, we can easily see a new low. So if we see a new low in bonds in TLT, then we will see a new 52-week high in. Very likely we're going to see a 30-year yield rise to maybe 3.25% or so. So TLT, I'm definitely avoiding it. Some people like to short it. We actually shorted it back in July here, and 20th of July, so we had a nice run there. So here we could again short it. I mean, if you're into this kind of thing, you can go long and short, but some people just don't like it. But if you know what you're doing, yeah, you can buy puts here, and for a hope for those puts to get more expensive. LQD, also known as investment grade corporates, also not looking good at all. You can see a break below support resistance. I thought we're gonna go higher, but actually there was no fuel in this rally. We see another breakdown. Overall bond market AGG also is not looking good at all. I think we could make fresh low here very easily. Junk bonds bounced off resistance right there around late of August, and then bounced off resistance. So junk bonds, I'm avoiding them currently. HYG, I thought we could go higher here for HYG. It did not occur. So now we can see another break below this red support resistance lines. Maybe a new low will be made. Junk bonds and stocks, let me just put it on the correlation chart so we can do JNK and JNK here as well. So junk bonds, you can see correlation is fairly high as well. You can see that junk bonds correlate fairly well with S&P 500. Again, if junk bonds and foreign markets are kind of moving to the downside, then I wonder how many, how much evidence do we need that S&P 500 could be topping out? It's possible. I'm not saying this outright yet, but there is now, because of the foreign markets, there's a possibility that S&P will top out here, and the entire totality of the stock markets would continue lower. Anything is possible, and we can also look at foreign stock markets of NAFTA, and actually I forgot to do that, so let's look at that. So let's look at NAFTA member countries. Here is EWW, Mexico. Looked hopeful. We had a potential breakout here on the 7th of August, and then another attempt here on 27th of August. Got sold pretty strongly. Now we need to just wait and see. It's not a very equivocal chart. It has a little bit of a bullish bias, so Mexico potentially is a good buy right now. Good buy right now. But I would wait a little bit, honestly. And EWC Canada can see a break below the support resistance line here after an apparent attempt to go higher. So we will see again where this is going. I'm not a big fan of this chart right this instant. So again, from all the charts of the world, I think S&P 500 looks the most bullish, obviously, and I would be buying it on a pullback towards 275 probably. So, but this returns me to the junk bonds dilemma. So if junk bonds are potentially even rolling over as we speak, we maybe make a new low, S&P could follow it lower. Yeah. Alright, let's continue to Forex. I'm actually sending alerts to my subscribers now on trial basis, see how it goes. So if you're interested, sign up at MasterChartsTrading.com and you can find out more about this indicator lines by either going to MasterCharts Trading or finding me on TradingView at MasterCharts. So here what I wanted to show again for the dollar index is the breakout that occurred on 28th of May 2018, and from here on we are only looking to enter on the long side or to buy. DXY, the dollar currency index, is composed of several several currencies. Quite a bit of it is euro, and in general I think the currencies more or less move together versus the same, versus the counterpart. So in this case, pretty much all of the currencies that I'm monitoring are in a downtrend versus the dollar right this instant. So basically what I'm looking for again is a pullback, but this may have already occurred, and I have a feeling that this is it. I think we may actually make a fresh high here, and we could see a strong breakout higher, and that would put further pressure on European markets. So VGK, European stock market will most likely get hammered even further if the dollar breaks higher from here. Alright, let's continue to the gold. So here are the gold futures on the daily time frame, obviously. So again, I don't normally trade intraday, and I usually trade on daily charts, or although occasionally I trade on weekly charts, and honestly on weekly charts it's even more obvious sometimes. It's even a better opportunities there. But here are the gold. Here's the gold chart. This is a bearish chart, obviously, because we have a break below this red support resistance line here on the 26th of June. Then we had a break below this yellow support resistance here on the 12th of July. So unequivocally bearish chart, and this chart I would only look to short. So where would I short it? Some people are okay shorting, just if it bounces a little bit. So right now basically at 1200 is a good place to short if you're very aggressive, but to me I would be much more interested if it bounces a little bit more to 1243 and we can look for a short entry there. Notice that gold miners just completely unraveled. GDX, you can see basically as early as May of this year, I was already cautioning my subscribers against owning gold-related equities. And yeah, look at this. just a collapse from 22 to around 17. So that's well, I mean, it's even more, but since recent history, it's like 20% collapse, and some markets, some gold miners really unraveled. Here's, for example, Newmont down, you know, my God, from 41 to 30, also 28% or so. Yeah, so lots of just collapsed equity here. So yeah, avoid gold, potentially shorted. Avoid gold miners, potentially short them. I would currently look for a short entry around 2050. Yeah, but I would not be looking to buy it. I need to see a significant bottoming pattern and then a close above the blue support resistance line. Alright, United States oil, we can do CL1 exclamation point, the futures, it makes no difference. So, pretty good place to buy would be at 64.90, 64.70, right where the blue support resistance line is. Bullish chart, so let's look for a good looking bottoming pattern around there. But yeah, it's a bullish chart. Natural gas futures, NG1 exclamation point. I shorted natural gas by buying UNG, so I bought UNG puts here, and I sold half of my position a few days ago to lock in some of the gains. I sold it right there. So looks like it's good. It's moving in my direction. You know, natural gas basically is in a downtrend. How do I know it's in a downtrend? Because way back when here, 1st February of 2018, we had a bearish break, and from here on, I only would be thinking about shorting, and I actually shorted it, natural gas here, first time in end of May, and then again here just recently in August. So, you know, pretty nice moves here in my favor. Is it going to continue? Nobody knows, but for now we're looking for a continuation to the downside. Right, let's look at Bitcoin. So last week I put this arrow here, and it just shows how much the Bitcoin needs to travel for me to become bullish on the security. So actually it's even more now. From current levels, because we're approaching again new lows, bearish security, by the way, we need to move like 100%, over 100%. We need to move almost $7,000 per each for me to become bullish on this security. This is just a total disaster of a chart. You know, and they can be played if you know what you're doing. So, for example, shorting on this chart would have worked just tremendously. Ethereum made a fresh low, and you can see it's right there. So, if you were opening a trade back on, let me see when this is, in July of this year, this is a over 58% move in your favor. So cryptocurrencies pretty much collapsed. Litecoin also approaching fresh lows. I don't see anything on this chart to indicate a bottom. XRP USD, Ripple, yeah, same thing, approaching fresh lows. I think pretty soon we're gonna have an ETF that can just trade the basket of cryptocurrencies. And here is EOS USD, another cryptocurrency that I don't know what they do, but this is a bearish chart, and it should be shorted as a bearish chart. Alright, that's it for this week's recap. please head over to MasterChartsTrading.com. That's MasterChartsTrading.com. Click on Alerts and Indicators and sign up for one of the plans. Some people sign up for alerts only, which is fine. But some people prefer to have the trading indicators, and I think it's a great idea. And you can click on trading indicators, and it's in my TradingView.com account, and I can share these indicators with you. The indicators that were used throughout this presentation, basically these 4 lines on the chart. Very useful to find excuse me, good price action, or rather good entry and exit points, for example. Also, it's really good. They're really good to set the trend and then stick with the trend and trade in the direction of the trend. So again, thanks for watching. If you have any comments, please comment below. And if you have any, if you feel like this video has benefited you, please share it with others. Thanks a lot. Bye bye.